The following segment is sponsored by Endeavor Silver, trading on the New York Stock Exchange, Amex, under the symbol EXK, on the Toronto Stock Exchange as EDR, and on the Frankfurt as EJD. Endeavor Silver, a silver producer focused on growth. We're joined now by the silver guru, David Morgan of the Morgan Report. His website is silver-investor.com. Mr. Morgan is one of the most preeminent world experts, not just in silver, gold, and precious metals, but related issues in the mining sector. David, welcome back to the Opportunity Show.
Ellis, it's great to be with you.
I'm looking at the chart for silver equities on kitcosilver.com, and I'm noticing that more of them are up than down today.
The truth of the matter is that the mining equities really have lagged the bullion for some time. It does concern me, but not to the level that it would if there weren't the silver ETF and the gold ETFs available. I think since the advent of those two structures, there's been a lot of money that would have gone into the mining equities that are not in the equities, that are in the exchange-traded fund. And as a fund manager, you really can't knock them for doing so, because they're very liquid. You don't have any of the problems relating to a mining equity. I mean, whenever you have a mining company, you've got potential problems. You've got management, grades can degrade, you can have labor strikes, you can have water in the mine. I mean, most of these things are worked through, and not every mine has a problem. It's just there's potential. Whereas if you buy the bullion itself, then you don't have any of those issues. All you worry about at that time is what's going to happen to the price. Is it going up or is it going down? So because of that, I think you've seen less interest in the mining shares. I'm actually more bullish on them than ever, and the reason being that I believe this time around it's going to be harder and harder to get the physical bullion as time marches on. And because of that, most people will prefer to go into the mining equities either because they can't get the bullion or it's a lot easier to do so. And as this market heats up more and more, people are going to flood, I believe, into these mining equities. So this may be the precursor to the next leg up. I certainly believe it could be.
You like to purchase the bullion when the prices have gone down. Do you expect that we've hit the bottom a while back, and given that there might be more flooding into both equities and the bullion itself, are you accumulating any silver at these levels?
For bullion, actually, you're partially right. Certainly I try to buy on the dips. But for the actual metal itself, if you're not in it, I think almost any time is the correct time. We've already seen an instance where it was difficult to get the physical gold and silver, and during that time frame, there was a huge premium or big disparity between the paper price listed in the futures exchanges and what you actually had to pay a dealer that had the metal. I think those days are going to reinforce themselves in probably not the distant future. As far as another pullback or not, I'm a little hesitant. I still think there's a possibility we might get another good pullback in the mining equities and also the bullion itself, due to the fact that the stock market itself is very, very overvalued at this time and looks like a setup to decline. If I'm right about that, then a lot of this money that's in the paper markets of the SLV and the GLD and the futures markets will sell off those paper derivatives of gold and silver, and since that market still overwhelms the physical market, you could see the metals get hit pretty hard. Will we see a new low? I doubt it. I don't think you're going to see $14 silver. You might see 15. I don't know. As far as gold, it's really held the $1,000 level. I have some very good friends that I won't name that are pretty darn good at technical analysis. I've maintained all along that we've seen the $1,000 level breach to the upside, and that level is going to hold. Could it pierce it to the downside? Yes, it could. But every day that you march above a $1,000 level, that becomes more and more and more supportive of the price of gold at $1,000 or higher. So I think we're in new territory. I think we're, again, getting poised for the next leg up. Have accumulated some cash, and I'm starting to move into some of that cash into a trading position right now, and I feel fairly comfortable doing that.
So you're looking at companies that have more than one asset in the ground?
Well, we look for value wherever we can get it. I mean, it's not that difficult, really, to look at the top-tier cash-rich unhedged mining companies and look at their income statement and balance sheet and get a pretty good idea of who's who. Within the majors, there's still these growth stories, and then there's the possibility. I just posted an article on the site today about the majors looking for more assets, so if they can buy assets in the ground cheaply, then they've added to their resource base. So there's all kinds of things that can happen in a major that actually makes a company superior to another. So we look at the best 5 or 6 on a monthly basis, and our basic premise is that you can buy probably 5 or 6 that hit the top tier category, and there's probably only 10 or 12 that have ever done that, and hold them through thick and thin. So that's your core position. And within that core, if you're going to trade, you can trade, the bigger equities as well, or the SLV or GLD or options or futures. I really don't care. As far as the juniors go, we also look for value, but that's much, much more difficult because within the junior you have basically green stone projects, which are, we got a property and we've never drilled it and we're going to try to find something, which is about as base as you can get, to the model I prefer, which is a small producer with exploration potential, which is most of the list. But we do take some long shots from time to time. Some have paid off, some haven't. But all the time we're looking for value. We're looking for value of the management, we're looking value for where the property or prospect is located, proven track record or something along those lines. We want to get as much variables known as we can, so there's as little unknowns as possible. Obviously in this business